Hey guys, welcome back. So while I was away for holidays, ICT put out 3 more lectures, a couple of trade examples, and a shotgun Saturday. Now I'm definitely going to go ahead and watch the lectures and give you my thoughts, but I'm not sure about the trade examples or the shotgun Saturday, but let me know in the comments if you want me to watch those as well. But for the lectures, I want to keep it in chronological order for the playlist. So today I'm going to go ahead and check out the SMC New York New Week Opening Gap with Forex, and hopefully I can catch up to his latest video.
Back, folks. All right, so we are looking at the New York New Week Opening Gap with Forex. Okay, so I want you to take a look at this and notice right over here. You see this? That is the Friday close, Sunday opening, 5 p.m. Eastern Time. So that is your New Week Opening Gap. So here's the New Week Opening Gap, and we're trading inside of the New York session. So here's 7 o'clock, 10 o'clock in this area here. And we're seeing this up close candle as a buy side and balance, sell side and efficiency. I mentioned that was likely going to perform as an inversion fair value gap. Market trades up into it. The bodies stay in close proximity to the midpoint of that. Then we rotate, go lower. And I mentioned that if we give up the ghost below this low here, after showing and proving that this is an inversion fair value gap, then it would likely trade down into the blue shaded area. And more specifically, if you look at this candlestick's low from Friday to the high candle inside of the gap, it would need the difference between this high to that low closed in. We have it here on this one single candle up, so it's lacking delivery on the downside, and that's what it does here. Okay, but prior to it, it gives you a nice little silver bullet short in here, stops dead in its tracks, and consequent encroachment of this SIBI, and we'll look at that in a moment.
So I got a comment a while back asking if ICT concepts work in Forex, specifically the midnight opening range. Yes, it does, and here he's showing the new week opening gap on Forex, but this also works with index futures. Now, to draw the new week opening gap, you want to go from the closing price on Friday, 5 p.m., to the opening price on Sunday, 6 p.m. He represents it here in a sky blue rectangle. Now, between the two blue lines is where the new week opening gap has a complete void of buying and selling. Here at 4:30, we do have buying with this up candle, but we still need a down candle in order to balance this gap. So this was the downside draw. Once we have a change in the state of delivery back up here, this inversion fair value gap acted as resistance, giving you an opportunity to enter short. There's even a last minute entry here before going to the draw on liquidity.
This is the 5-minute inversion fair value gap, but it's being shown over a 1-minute chart. The market trades up into midpoint of it here after leaving it. Notice it trades lower here and then rallies back up into it here. And you'll see that I actually went short there and then waited for it to rally up. My stop loss was right above. See these two candlesticks sharing the same space right there? The close and the low. So at one point, this candlestick went down to that low and then closed there and then opened and traded back over top of it. So this small little area here is a balanced price range. I felt very confident that this little area here would not be traded back into. So my stop loss is right above this candlestick's opening price. The price breaks lower, comes back up, creates a little mohawk, I call it, where it just trades in colors outside the lines of the inversion fair value gap. But notice what the bodies are doing. I want to see it stay in the lower half, and the bodies should stay in the lower half or at the consequent encroachment, which is the midpoint here, this dotted line here. Then the market breaks lower, comes back up. It goes right to this price level here we were looking for. I noted in audio clip, I said I want to see this point broken after this inversion fair value gap has proven itself. So it had to be traded to several times, and I went short here, and then I waited for this one here. I didn't want to add any more to it. And then it rotated lower, broke through here, came back up into a small little fair value gap right there in that pink box, trades right up into consequent encroachment. And look at the bodies respecting half of that. and breaks aggressively, creates a silver bullet. This is your 10 o'clock silver bullet. Breaks lower, comes back up, hits consequent encroachment there, and then sells off into the two little blue lines.
So I really liked how he talked about his stop loss up here. I guess it takes experience to pick out this kind of stop loss. You know, if it was me, I would still think we can go back into this fair value gap, and I will have my stop loss just above this order block right here. Or more likely, I would have waited for a confirmation like this, and then I would have entered into a fair value gap somewhere up here and have my stop loss above the high of that fair value gap. But I think I would have a hard time holding through this time distortion and probably get stopped out break even. But who knows? It's all hypothetical. Even ICT was paper trading here.
I'm not trading with Forex with real money. Zoomed in here, here's a 1 minute chart. Price trades up into the 5 minute inversion fair value gap, breaks lower, spends a nice run into that low, stops dead in its tracks, rotates back up higher. I sell short once more, add one more. Trades right back to consequent encroachment here. Notice the bodies. I told you that the lower half of this 5 minute inversion fair value gap, the bodies need to stay below that. That's how you're going to be able to qualify that this is a proper inversion fair value gap that should send price lower. It's okay for these wicks to trade above it. That's where the damage can be done. But the bodies are showing you the signatures that the algorithm is absolutely indicating that this is just running stops. They're getting real dirty with it, running each previous high, not allowing anyone that trails their stop loss too tight and aggressively. You got to abandon this idea about quickly moving your stop to break even or locking in something. You're going to have to assume some measure of risk. Otherwise, there's a lot of trades, and it's going to be the better trades you're not going to be a participant in.
So yeah, he really nailed it for me. One thing I'm struggling with is moving my stop loss too quickly and missing out on the bigger picture. But also, a lot of the times, moving my stop loss has prevented me from taking an even bigger loss. So I need to find the right balance, and I think backtesting will help me with that. I do plan to backtest all of 2024, so if you want to see me backtest or see my results, make sure to hit that subscribe button.
And the market breaks lower after spending some time in this higher SIBI here in the lower half of that inversion fair value gap. Spends its time here, breaks aggressively lower, comes back up, fails to touch the low of that, and then goes lower. That is another indicator. It's a signature telling you that it's now weak. It can't even get up to the inversion fair value gap. Trades back down to that same low, bounced one more time, failed to take out that high, rolled over aggressively, pierced through it in a small little fair value gap, trades right up into it. Look at the bodies. See that? Isn't that nice? That is algorithmic. It's half of the gap stopping right there, even on this candlestick here. It breaks lower, takes out this swing low, and it creates the very obvious, easy silver bullet. Now, you may not have noticed this one. This is a little bit higher order silver bullet trade, but this one here is the obvious easy one that you simply wait for and just jumps off the chart at you. That's here, and we're picking up the difference in price. It drops lower. You can see as we're trading into that new week opening gap in blue, I'm taking the remaining positions off as it trades inside there. So you can see obviously all this stuff works in Forex.
Okay, so this video was pretty good. A lot of gold nuggets in this one, very little ranting. He points out several algorithmic signatures and reviews a paper trade that he took, where the stop loss should be, and how he picked his targets. As always, make sure you check out the original video in the description, rewatch this one, and take note of all of the algorithmic signatures. But until next time, guys, safe trading.